Welcome back. And in our business news, the IT services market in the Middle East, which was valued at $3.6 billion in 2011, is estimated to reach $5.2 billion by 2015, growing at 9.6% annually over the 5-year period, according to the recent Dubai Chamber of Commerce and Industry study. The report reveals that the major growth driver for the IT services market in the Middle East is the government support for IT initiatives. Several regional governments, such as Saudi Arabia, the UAE and Egypt, have taken initiatives to implement e-governance in offices, schools and colleges, which is driving the growth of the market. Paul Hogan, the CEO of Etihad Airways, has been quoted as saying that Etihad has been approached by all Indian carriers for the possibility of buying a stake into their airlines. According to a local paper, on the sidelines of the World Passenger Symposium 2012, held in the capital on Tuesday, Paul Hogan stated that all the Indian carriers have approached us, and Etihad continues to evaluate the impact of foreign direct investment. He added that everything they do is a minority stake, as they don't want to take full control, having also stated at the forum that the airline is shifting its focus towards emerging market powerhouses. The approach of Indian Airlines to Etihad comes after India lifted a ban on investments from foreign airlines last month, now allowing them to invest up to 49%. Additionally, the International Air Transport Association revealed that the aviation industry contributes more than 145 billion dirhams to the UAE economy, or the equivalent of 14.7% of GDP. With women representing nearly 50% of the population in the Middle East, their skills and talents for the workforce are essential to drive the region's economy forward. Experts say that many of the region's countries have the common vision of growing their economies through diversification, and that in order to do so, they must encourage women into the workforce. The Economist Intelligence Unit report, sponsored by the Advanced Investment Technology Company, revealed its findings today in Abu Dhabi, highlighting the strong implications for women and their role in the future of the region's economy, as more women are significantly earning more advanced degrees than men, especially in the fields of science and technology. However, many are finding it difficult to gain positions into the workforce. Experts say that this is not just a call to policymakers, but also to the public, in order to encourage their daughters and families to embrace their talents and become vital pillars to boost the economy.
Policymakers have to sit up and take notice, and they have to realise that, especially given the fact of these economic visions, these blueprints for economic development across the region that are being released, the realisation of these economic programmes are really called into question if they can't get 50% of essentially the brain power of the region into the sectors that they've highlighted for future development. So one, I would say policymakers need to take notice. Two, the biggest obstacle currently is reform the education system, which a lot of places across the Middle East have done and are taken seriously. And I would count the UAE, in particular Abu Dhabi, Qatar. But when you look at the geographical region of the Arab Middle East, really there's a huge amount of improvement needed on the content, the curricula.
Abu Dhabi Islamic Bank Group posted a net profit of 328.5 million dirhams for the third quarter of the year, while the performance from the main banking business remained strong, as the bank's net profit grew by 14.5% to 405.7 million dirhams, up from 354.4 million in Q3 last year. So with that, let's now take a look at the stock indices across the GCC. looking to other business news, Portugal's centre-right government presented its 2013 budget at the start of the week, which includes the toughest tax hikes yet under the country's bailout. So will this better serve the long-term interests of Portugal as projected by the country's finance minister? Well, we earlier spoke with Philippe Daba-Pantanache, the senior economist at Standard Chartered Bank.
The budget for Portugal basically plans for the biggest tax increase in the country's history. We're talking about a 4 percentage point increase on every income, which would take the average rate tax from 9.8% to 13.2%. And for many, this is really seen as basically intolerable. What happens is that Portugal, if it wants to meet the condition of its bailout of 78 billion euros, it needs to achieve basically cuts that are equivalent to 1.6 percentage points of GDP next year, which is a huge number to achieve. So in order to do that, the government doesn't have a lot of option in its hands. What's happening is that this budget hasn't been passed into through Parliament yet, and shall they do so, there's definitely a threat of social explosion. And I think that we have seen recently a very surprising ally coming to support, I would say, a lot of these peripheral countries, and that's the IMF, which have said that maybe too much austerity could be self-defeating for these countries, and that they should be allowed more time to actually meet their targets.